All right, time to have a look at the world of real estate. Joining me live is REA senior economist Anne Flaherty. And Anne, the rapid rise in interest rates has seen less activity in the property market, with the total volume of lending down. What's the latest?
Yeah, that's right. We had the latest figures from the ABS yesterday, and we've seen that lending for new homes has declined for the 11th consecutive month. So, across the board, we've seen lending down around 4%, and that's both for owner-occupiers and also for investors.
What have we seen with the prices over the first month of the year?
Yeah, well, unsurprisingly, with interest rates continuing to rise, we've continued to see property prices fall over January. So this marks 10 months in a row where we've seen prices decline. However, we have started to see the rate of decline slow. So it was already slowing towards the end of last year, and those price drops did slow a bit further as well in January.
What's the driving difference in performance between the states, would you say?
Yeah, look, it all comes down to that affordability factor. So, for example, across Australia, the average loan size is around $600,000. But in New South Wales, the average loan size is closer to about 750 grand. Whereas in SA, WA, NT, Tas, the average loan size is still sitting below 500,000. So that means that relative impact of interest rates is going to be much greater in, say, Sydney and in Melbourne. And correspondingly, we have seen the biggest price drops in those markets.
How much further could prices fall, in your opinion?
Look, I think that it has a lot to do with how far interest rates move. But at the same time, interest rates aren't the only factor that determine property prices. So, for example, banking regulations, population growth as well will be an interesting one, because, we're on track to see around 300,000 extra people come to Australia, which is, above Treasury forecasts. And of course, when it comes to supply and demand, if we can't deliver the supply of new homes that's going to be needed for our additional population, that will put a floor under how far prices can fall.
What do you think will happen Tuesday?
Oh, that's always the question, isn't it? I think that we're most likely to see interest rates move up again. The latest inflation figures were quite high. They were still within the expectation of the Reserve Bank, but I think, if I had to put my money on it, I would say we'll see another 25 pip raise.
Have you and your team had a bit of a look at when you think this cliff may happen? And when I speak of the cliff, I'm talking about people, particularly young people or couples that have taken out home loans, in the 1 percentage point for a couple of years, which, largely described as honeymoon rates. And then they'll be falling off the cliff and entering figures closer to 5.
Yeah, look, those fixed rates that were locked in during 2020, 2021 that were extremely low, this is the year that those are set to roll over onto higher interest rates. I think that the people who will be most at risk are those who did buy in 2021 when the market was extremely hot. We had buyers bidding very high prices just to be successful in that environment. And now with property prices declining, there will be a proportion of people who, are in that negative equity situation, who are going to be faced with very high repayments.
What about the rental market? Any better?
Look, I think that the rental market is going to continue to be very challenged. So I think it's going to remain very tough for tenants out there. We've got vacancies sitting at record lows in many markets. And as I said, with 300,000 people expected to come to the country, that's going to place additional pressure. I'm sure, those headlines around, the fact that China's international students are going to be coming back very shortly to Australia, that's going to push up demand in inner city areas around universities. So those markets are going to feel a big impact very soon.
Yeah, absolutely. It's a very interesting market right at the moment, and always good to chat.
All right, see you later.